Good morning, students. I am C. Ankit Sharma for your income tax as your income tax faculty for the third session of our topic, that is salary. I hope you all are studying well and working hard. So there is our third session of salary, and we will going to complete perquisite provisions today and the valuation rules also. So before starting the class, let's have a good morning from I guess Jaysha, good morning. Janish is good morning. Khushi, good morning. Aman, good morning. Okay, I have already uploaded the solution of MCQs, which we discussed in our last class with the solution, the answers and the solutions of numerical topic. Okay, somebody is asking me the MCQ number 4. Okay, Aman, I will discuss the MCQ number 4, of course. Okay, again, good morning. Sankaran, Chanchal, Shruti, Kabir, Sapna, Anish, Parasthai Prithri, it's a very difficult name, Kabir, Vishakha. You all have a very good morning. Namaskar, Sat Sri Akal, Shabba Khair, or whatever it is. So let's begin our class. Before that, today, before starting the class, we will have an MCQ test and then we'll move on to our topics one by one. Okay. So I'm sharing you with a screen of our second MCQ test. You should have a paper, pen, and a calculator. I'm giving you a time of 1 or 2 minutes so you can collect that. So meanwhile, I want to share today's beautiful quote with you. And this is, I walk slowly, but I never walk backward. You know who is he? He's Abraham Lincoln, of course, the one of the most famous personality, the greatest leader of all time, we can say. So he said, I walk slowly, but I never walk backward. Understand the meaning of this beautiful quote. It says that whether it's slow, it does not matter. There should be some improvement. So you always walk forward gradually, one by one, but you should never walk backward. You can connect this quote with your study. Whenever you are start your studies, you should understand one thing, that if you are studying 1 hour in a day from today, then in future, that time should be increased. It might be 1 hour, 10 minutes, then 1 hour, 20 minutes, then 1 hour, 30 minutes, then 2 hours, etc., etc. Do not go backward. I'm again saying this, it does not matter how small the effort is, but the matter that it should be in positive side. It should be in improvement side. So even you are not start studying your study well and your attempt is May 23 and you might be thinking, oh God, now it's too late. No, it's never late. You can start from today also. And even if you start from today and improve slowly, you might be able to clear the group in May 23 also. It all depends upon you, how much effort you are going to put into this. So never imagine that any effort is small, because every effort matters. For example, if you do have a time of only 30 minutes today for study, you are occupied in some marriage, some function or family function, etc., but you have only 30 to 40 minutes to study today. And you might be thinking, what I'll do in 30 or 40 minutes, let's skip it, I'll study tomorrow. No, if you have that 30 or 40 minutes, you should utilize that time in your study. Do not think that it's a very short time. How it will make a difference? It will make a difference. So every effort matters. Every effort definitely matters. And your all effort should be in a increment side. It should be in positive mode. Never walk back. It's a very, there is a very small story which I personally like a lot regarding this effort thing. And I think might be a lot of you must have heard it before also. Let's share it with you in 2 minutes. Then we'll start our MCQ test. Okay. So there was a kid at the beach with his father. And what happened? He saw a lot of fishes actually came out of the sea and they were dying. Thousands of fishes were there. And they were technically dying because they were out of the sea due to some wave, etc. So a lot of people were standing there and all were seeing, because there were thousands of fishes were almost dying. So what that kid started doing, he ran away and pick up fish and throw into the sea. So technically he saves one fish life, and then again he ran away and pick up another fish and throw into the sea. And might be all those 1,000 fishes have 1 or 2 minutes, because after 1 or 2 minutes, they all are going to die. So that small kid is running very hard, and might be he is able to save 10 or 5 fishes only. So people were asking and laughing at him and is saying, why are you doing this? You cannot save all of them. You cannot do anything. You cannot save them because you don't only have 1 or 2 minutes. Then the kids reply. The kid replies that at least I'm going to save 5 or 6 or 4 or even 1. But that is also better, because if I am able to save only 1 fish, exactly, that is also going to matter. So that effort is really matter, whether it's small or big. So that's a very inspirational story. And I personally believe, yes, if you have choice to effort small or big, you should try every kind of effort. You do not think that you are using only 15 minutes in study, it will not going to help you. It will help you. Those 15 minutes count. Of course, it counts. So now moving on to our today's test. I have prepared a MCQ for you. If after this test, I will discuss MCQ number 4, as somebody was asking me to discuss. Aman, okay? So please, you should have a paper, pen, a calculator to solve these questions. Where is question number 1? A teacher receives remuneration for setting question paper for examination. What is the chargeability position of this remuneration? Choose the most appropriate answer. So a teacher who generally teach in a school or a college has given an assignment for setting some question paper, and he will be receiving additional remuneration for that work, except his teaching work. So I'm asking, that kind of remuneration is going to be taxable under which head? The correct answer is option B. It cannot be taxable under that salary, because salary is for some fixed service which you need to give to someone. As I discussed in our first session, there will be a salary payment only when there is a relationship of master and servant. Somebody is there to order you and you need to follow that. So when school or college asks you to set up paper, they do not tell you that which question you should select. So that payment will not fall in the category of salary. That will be taxable under that income from other source. Okay. Second MCQ. Pawan, employed in Magic Limited, was eligible for transport allowance of 2,000 per month to meet his travel expenses from residence to office. He actually incurred 1,200 rupees per month toward travel. The amount of travel allowance chargeable to tax as perquisite will be. So you should understand the chargeable to tax, not as a perquisite. You should need to answer me what amount, how much is going to be taxable as travel allowance provision. So now I'm waiting for your answer, because first question was very theoretical, so I didn't ask for your answers. Question number 2, you need to answer me what amount is going to be taxable as travel allowance. Let's see who is going to answer me first. Today you can do one thing also. If you are asking me any query, then kindly tell me from where you are asking the query. I need to know which cities you are technically. So if you are sending me a query or your answer, so if possible, send me the location of you. Location does not mean I need your house number, of course not. I just need to know the city from where you are asking this. Okay. Good morning. Anand is asking, are you able to see my text? This is Anand. Okay. Hello, Anand. Yes, I am able to see your text. Okay. I have uploaded. Sankaran is asking, sir, after 29th October, have you uploaded any notes, assignment? Yes, I have uploaded an assignment yesterday. for the last MCQs and the solution regarding that. Good morning, sir. Good morning, Kavita. What happened, Kavita? You don't seem well. Mahima is also not seems well. Okay, Sankaran, I like your sharing info in addition to subject. It gives a lot of inspiration. Really, that's really good. If I am able to inspire even one student, I told you the story. So if I'm able to inspire even one student, that matters for me. I'm trying that I should be able to help all of you. But even if I'm able to help a single student, if he's going to be benefited by whatever I'm doing or what I'm saying or whatever I'm teaching, I'll be happy because that every effort matters. Okay, so question number 2 answer I'm waiting. And yes, Miss Shital Nakawadi is saying the answer correct is D. Abhishek Pandey is saying again D. Chandan is saying A. Alok is saying again A. Krishna Shah is saying A. Sandeep is saying B. Anand is from Mumbai. Hello, Anand. Okay. Then Anand is also saying our answer is B. Nisha is saying B. Jyoti is saying A. Kushi is saying 24,000. That means, I guess, A. I am from Ahmedabad. Mr. Vora from Ahmedabad. Very nice. Good morning. Good morning. Still good morning is going on, I guess. Okay, Priyanka is from New Delhi. Okay, hello Priyanka. And answer is B. The correct answer is technically A. What are the provision for transport allowance we discussed? We discussed that in case of only handicapped or physically challenged, of course, 3,200 rupees per month is exempt. And other than those are not handicapped. The whole amount is going to be taxable. There will be no exemption. So because in this case, there is not mentioned that Mr. Pavan is handicapped. If it is an handicap, of course, it will be given in question. Don't take assumption yourself. Okay. So because he is a normal employee, so whatever amount of allowance he will get, that is going to be taxable 100%. So taxable value will be 24,000. The correct answer is A. Just Shai is saying amount must be 9,600. No, it's again wrong. Okay. Third is Sahil, an employee of XYZ Limited, receives 25,000 per month as basic salary. In addition, he gets 15,000 per month as dearness allowance and 80 rupees per month as for 3 children each as education allowance. His gross salary will be. Now you need to calculate the gross salary. Matlab, we need to calculate the all 3 things like this. In this answer, now you need to calculate how much will be the basic salary. You need to find out. Then how much DA. And then how much taxable children education allowance value. The total of 3 will be called gross salary. So kindly find the answer of gross salary. I am waiting. I am giving you almost 2 minutes to solve this question. Okay. Miss Branti Doshi is from Yavatamal. Where is this Yavatamal? I exactly don't know where it is situated. In which state is this Yavatamal? Okay, Anthony from Kerala, a beautiful place, God place, very nice place. Praveen is from Jaipur. Yes, I've been there, Praveen. I've been in Ahmedabad. I've been in Jaipur also, few days before. I have been in Kerala also, some time before. Okay, so let's see. Question number 3. Somebody say answer is, Alok is saying D. Again, Dhyanesh is saying D. Saurav is saying D. Branti Doshi is, okay, it's near Nagpur. Okay, nice, beautiful place. Wasim is saying D. Srinagar. Wow, beautiful, beautiful place. Wasim, I have been Srinagar also. Alok is from Jaipur. Great. Pranav is saying D. Kabir is saying D. Very nice. All of them you have given me the correct answer. The correct answer is D. If somebody does not arrive at the correct answer, I'll again upload today MCQ and the solution that how we came onto the correct answer. You can check it out from there also, or if you want, I can solve it over here only. Basic salary will be 25,000 into 12. That is, I guess, 3 lakh rupees. Then DA is 15,000 per month. So for the whole year, it will be 1,80,000. It does not matter it as per DA's term or non-term for calculating gross salary. It matters when we calculate gratuity, etc. That is it for DA terms of employment or not. For the purpose of calculating gross salary, whole amount of DA will be included always. Fine. Now the children education allowance, he is getting 80 rupees per month per child for 3 children. So we can claim the exemption of 100 rupees per month per child or maximum for 2 children. So one children allowance is exempted completely, taxable value is nil. Again, second is also taxable. The third is going to be taxable is 960 rupees. So if you will do total of all this thing, that the correct answer will be 480,960. I hope it's clear. Okay, next is question number 4. Mr. A received rupees 4,60,000 for encashment of 600 days leave. After serving 32 years of service, he got 37 days leave every year. AMS, that is average monthly salary, rupees 20,000 per month. Calculate leave encashment taxable. So for the purpose of calculating leave encashment taxable, again, I just told you that never take wrong assumption to solve any numerical. So because in this question, it has not been written that Mr. is a government employee or not. So if somebody of you is thinking that let's assume that Mr. A is a government employee, so whole leave encashment is exempted. You can't do this. Assumption should be positive. Positive means with the help of that assumption, we can solve the question, not to block the question. So if you will take an assumption that I will assume that Mr. A is a government employee, so that answer cannot be correct. Always take positive assumption, not a negative assumption. So for calculating the leave encashment taxable, we need to find out 4 amount. Out of the 4th amount, whatever will be the minimum amount is going to be taxable. First amount should be that amount received, that is 4,60,000. Second is our fixed limit, that is 3 lakh rupees. Third is 10 into AMS, and fourth is leave earn minus leave avail into AMS upon 30. So I just revised the provision. Kindly calculate and tell me the correct answer. Okay, Nikhil is from Karnataka. Again, very beautiful place. Andhra Pradesh. I've been there for my audit. Andhra Pradesh, Anantapur, and that was Shri Kalasthi. Again, next is Deepika is from Korba, Chhattisgarh. Wow. Okay, next is Dhyanesh is from Maharashtra. Okay. Acharaj is from Lucknow. Very good. Jay is from Mumbai. Okay. So question number 4th answer, Sapna is saying D. Okay. Rohan is saying the answer of question number 3. Mahima is again saying D. From Nagpur, it's 3 hour distance. Okay, Miss Doshi. Very good. I always ask you, whenever you are giving me the correct option, kindly mention the answer number, question number also. So somebody is saying the answer is D. Somebody is saying again D. Somebody is saying the correct answer is 480. Question number 4 answer I'm waiting. Shruti, yes, your answer is reaching to me. Actually, I'm not able to call all of your names because a lot of students send me the answer and I'm not able to take names of all students. So just relax. If you are using the correct portal, of course, your answers, your queries automatically coming to me. From Kavita, from Jodhpur, very nice place. Okay, from Kolkata also. From Delhi, Karnataka, Pune, Navi Mumbai, question number 4 answer has been D. A lot of students have given me the answer, that is D. But the correct answer is not D. The question number 4th correct answer is B. I need taxable value. So you need to find out the correct tax value. It's a very tricky question. Let me tell you. It's a very tricky question. Of course, I'll upload the correct solution also, but let me discuss it with you over here. Fine. To calculate leave encashment exemption, we need first point is amount received, that is 4,60,000. Second is fixed limit, that is 3 lakh rupees. Third is 10 into AMS, which already given in question is 20,000 rupees per month. Otherwise, it will be as per gratuity C case, basic salary, DA term, and percentage commission on sale. So that amount comes to 2 lakh rupees. Now, fourth point. If somebody is giving me the answer D, so D is the exempted value, and that is also wrong. Exemption will be lower out of all these 4 points. Now, the fourth point is very tricky, which says leave earn minus leave avail into AMS upon 30. Now, for leave earn, there is a maximum limit of 30 days as required by the government. So now it's 30 or 37, whichever is lower. So technically, which is lower? That is 30. So leave earn will be now 30 into 37. I guess it will be 30 into 37 minus leave avail. Just a second, let me solve it for you. So 37 into 30 is, sorry, the number, it's just a second. So year of services, sorry, not 37, that is 32. So 30 days of leave every year. So total will be 960. Leave earn will be taken 960. Now we need to deduct leave availed out of this. And in question, leave availed is not given. Leave unavailed has been given. 600 days payment we receive 460 for 600 days. So always we receive the payment for those leave which are unavailed. And we need to find what? Leave availed. So to find leave avail, if it is not given in question, if leave avail is not given in question, then to find out the leave avail, what we need to do? We need to take the total leave. Total leave, how much total leave we have received? That is 37 leave every year of service. So total leave will be taken on actual basis. Leave earn will be from 30 or 37 formula, but to find out actual leave avail, we need to take the actual total leave, and that will come to 1184. So total leave was 1184, which has been provided by my employer. And now leave unavail, which is given in question, unavail, that is 600 is unavail. So how much we technically avail? That is 584. It is just like this. For example, you have 1,184 rupees in your pocket in the morning. 1,184 rupees in your pocket in the morning. And by the end of the day, you have now left with 600 rupees. So how much you spend? That is technically 584. So 584 will be put over here. So now we have leave earn. Now we have leave avail. Now AMS upon 30. So I guess this figure will be exactly 250,667. But the minimum of all of these following is going to be exempted, that is 2 lakh rupees. So 2 lakh exempted, the remaining 460 minus 2 lakh is going to be taxable. So that's the way we need to solve it. That's a very good question. So in question, if leave availed is not given, then how we will find it out? It like this. I already told you when I taught you the provision of leave encashment. Moving on to the next question, last question of our MCQ. Now solve it and give me the correct answer. Again, it's for leave encashment. Okay, Nisha is from Delhi. Very good. Abhishek also from Delhi. Very good. Miss Priyanka is from Haryana. Very nice. Pranav is saying, sir, 37 days they rakhe hai, par allow to 30 leave hai. Correct. So if 37 days दे रखे हैं मतलब अलाउड 30 है, इसीलिए हम लीव अर्न में 30 लेते हैं. लेकिन जब हम अनअवेल या अवेल लीव निकालते हैं तो हम उसमें एक्चुअल लीव के हिसाब से निकालते हैं, अदरवाइज करेक्ट आंसर नहीं आएगा. सो whenever it asks to calculate leave earn, then you need to take 30 or actual, whichever is lower. But if you need to find out the leave availed, if these are not given in question, then for total leave you need to take the actual leave has been provided by the employer. So question number 5, correct answer. Kindly tell me the taxable value. What will be the taxable value in case of question number 5? First is 10 lakh. Second is 3 lakh. Third, we need to know AMS into 10, that is 15,000 into 10, that is 1,50,000. Now, the fourth point is always important in leave encashment. All 3 points are very simple. So now leave earn, how much we will take? Minus leave avail. The good thing in this question, leave avail has been given. Leave avail has been given in this question. Can you see that? So we do not need to do that concept, the total leave minus leave unavail, because leave avail is given in question. Total leave minus unavail. This will be applicable only when leave avail is not given in question. So because in this example, leave avail has been given. So you not need to do that total leave minus unavail, because there is no requirement. We need to know avail leave and we have automatically avail leave with ourselves. So the correct answer of question number 5, I'm waiting. Yes, just in C. Again, Alok is saying C. Rajendra is asking, sir, my message received. Yes. Vishaka is saying C. Joel is saying C. Anand is saying A. I'm not asking the exempted value, Anand. I'm asking the taxable value. So the correct answer is option number C. Let me tell you how. It's like first is 10 lakh rupees. Second is 3 lakh. Third is 150, 10 into AMS. Now fourth came again. And now again, leave earn minus leave avail. Leave earn minus leave avail. This calculation is important. Everything else is very simple. There is nothing much to do about anything else. You need to find correctly these 2 points. And that is, now in this question, leave earn will be maximum 30 days or 25, whichever is lower. So now 25 is leave earn. And for 32 years of service, that will comes to 800 days. Now we need to deduct leave avail. Because in this question, leave avail has already been given. So you not need to do any calculation. This is leave avail. Now you can solve this point. And this limit, whatever it will come, lowest will be this. So this is going to be deducted out of 10 lakh rupees and 8,50,000 is going to be taxable. I hope it is clear. So we have done with our MCQ today. Now moving on to our basic notes. So we have discussed in salary the meaning and applicability, of course. We have discussed about the format. We have discussed about the basic salary, area of salary, advanced salary, etc., etc. A lot of allowances we discussed, of course. Taxable allowances, partially taxable, and fully exempted allowances. We have discussed provisions of leave encashment, provident fund, etc., etc., etc. Now we are moving on to this point. Point number 12, we were discussing technically part B, that is tax-free perquisite in all cases. And out of that table, the point number 12, leave travel concession, we were discussing at last time. And at that discussion, we discussed the provision, note number 1, 2, and 3, and 4. Now, we are discussing rule number 2B, because it says that the leave travel concession exemption will be as per rule number 2B. So what was leave travel concession? We discussed already that if your employer provide you that you should travel, he is giving you some leave to travel anywhere in India with your family, then the traveling expenses can be claimed as exempted as per rule number 2B. So how we will find the traveling expenses exemption? That's what is going to be discussed right now. So the provision says, rule number 2B says, That exemption will be find out as follows. If the travel has been done by aircraft, if your employer provide you LTC that you can travel via aircraft, then in that case, it says that amount of fare of economy class by national carrier, like the journey you just completed or the travel you are going to be made with via aircraft. In that case, you need to find out the fare of that aircraft by economy class by national carrier. That means via government national carrier value of that fare or actual amount spent. Whichever is lower is going to be exempted. For example, if your employer allowed that you can travel via aircraft and you travel with your family with aircraft, then we need to find out you travel via Indigo. It's a private airline. You travel via Indigo and the amount expenditure was for say 50,000 rupees. You paid 50,000 for this. Your employer provide you LTC for 70,000. That we will reimburse 70,000 as your LTC expenses. You can travel by air and you got some coupon, some voucher, some scheme. So you spend 50,000 and you travel via Indigo. Now we need to find out that if you travel via national carrier by government airline, then what is the fare for that journey? And might be, for example, if that is 46,000. If you travel via national carrier, not by private airline, then the amount of fare is 46,000. It will be given in question. You need not to worry. Everything in numerical is given in question. You just need to recall or remember the correct provision, need to put the value over there and you will get the answer and you will be passed and you will be a CA. Okay. So national carrier is ticket value is 46,000. Actual amount spent is 50,000. So what is going to be exempted? Of course, 46,000. So this is called exempted value. Now, what is taxable? There is a universal formula for taxable value, received minus exempted. So how much LTC was received? 70,000. Out of that, 46 is going to be exempted. So 24,000 is going to be taxable if the journey has been performed by aircraft. In the same way, if journey has been performed by train, in that case, we will compare it with first class AC fare, first class AC fare or actual amount spent, whichever is lower. Same concept, you just need to remember this first point in every case. If the place of destination has not been connected via train, if there is no train connected, then if there is any public transport exists, public transport, then the AC or deluxe bus fare or actual amount is spent, whichever is lower is going to be again exempted. And if there is no public transport exists, that means there is no government transport exists. From where you are going to the destination, there is no public transport exists. No bus services of government has been there. No train is at the destination port. So in that case, what we will do, the government has made a special provision like this. For third case, we have discussed if public transport exists, deluxe bus or AC bus fare or actual amount is spent, whichever is lower. But if no public transport, then it says you should take this first class AC fare via train. We just said that there is no train connected, then how can we take this? So the complete thing is this, first class AC fare via train for such distance. So technically, practically, no train is going there, but we know the distance from the place you're starting the journey until the destination. For example, if we know it is 350 kilometers, There is practically no train is connected to that. But now we can find out if there is some place in India if it is 350 kilometer far, and if train is connected, then how much the train fare is generally. We can find it very easily. So we can say that is technically it's a fair market value of that fare, of that distance. So we need to calculate the distance. So if, for example, I am sitting over here and Mumbai from my place is like 1000 kilometer far, and I am going somewhere else that is also 1000 kilometer far, but that is not connected with train, then I can find how much fare from my place till 1000 kilometer of Mumbai, which should be charged. That is going to be put over here. That is also going to be given in question. So you not need to calculate the fare. Fare will be given in question. You need to put it over here. And the second is, of course, actual amount is spent, whichever is lower. That is going to be exempted. Balance is going to be taxable. In all the starting points and all these points, where we are taking amount of fare of this and this and this and the last one also, the fare will be taken by shortest route. If you need to go from Delhi to some other place which is 200 kilometer far, then you cannot perform your journey via other cities. Like you are going some other place first, then other, and then you are coming to that place which is only 200 kilometer far from it. So the journey should be performed by, in all cases, via shortest route. For example, I stay in Agra, fine, the city of Taj Mahal, and Delhi's from my place is 200 kilometer far, almost. So if I need a journey via train from Agra to Delhi, I cannot travel it like this, that first of all, I will go from Agra to Mumbai, then from Mumbai to Srinagar, then to Srinagar to Karnataka, then Karnataka to Kerala, and then from Kerala to Delhi. So I cannot ask this kind of LTC exemption. The journey should be the shortest route. The exemption will be claimed. Whatever is the shortest route value of these fare will be taken over here. And all these value will be given in question. So you need not to worry. And everything has been written in notes clearly. So as per rule number 2B, following amount is exempted in case journey performed by air. Amount of air economy fare of the national carrier by shortest route or amount spent whichever is lower. In case journey performed by any other mode, in case train service available, of course, amount of AC first class by shortest route or spent whichever is lower. Third point is destination and journey of starting is not connected by train. Then we already knew if public transport exists, first class or DS class fare of that transport, public transport, generally it will be bus or any other public transport, or amount spent whichever is lower. No public transport, then AC first class train by shortest routes for such distance. Okay, that all will be given in question. Amount spent is also going to be given in question. LTC is also going to be given in question. We just need to apply the correct provision. So that is the perquisite we just discussed. The other perquisite is point number 13 from the table number B, and that is medical facility. Now, income tax is a very emotional act. I personally feel income tax is a very, very emotional act. Why it is emotional? Because whenever it's about life, death, health, etc., it always gives you benefit. A lot of benefits are there regarding your health, your life, your family, etc. So technically, income tax like Karan Johar movie. Everyone is so emotional. Generally, in Karan Johar movie, what happened? A part is very funny, very interesting, and the other part is like very sad, very emotional, like Kal Ho Na Ho type. So technically, income tax is like very emotional act. I personally believe. So whenever it's all about your life, health, family issue, etc., they are actually there and give you the benefit. So now we are talking about the valuation of medical facility. Like your employer is reimbursing you for the medical treatment of employee or his household or his family members. So if employer is paying for your medical bills, etc., so there are a lot of exemption has been provided under income tax. One by one, we are going to discuss. Following are not taxable in the hands of employee. Following are not taxable. You all know the guidelines, of course. This is our third session. You should focus. I will answer your query after 20-30 minutes or 30-40 minutes of lecture. So after point number 13, I will discuss the query. If you have sent some, so we will discuss, we will solve it. Fine. First is the medical facility provided in a hospital, clinic, etc. maintained by employer. So if the hospital is maintained by the employer, for example, I am working in a hospital as an employee. And if I need some medical facility and my employer said, do not worry, just admit yourself in my hospital, get the treatment and everything is free for you. So in that case, nothing is going to be charged. Full perquisite is exempt from tax. So first point is only applicable when you are working under a hospital which is maintained by the employer. The second is other cases when hospital is not maintained by employer, when you are going to other hospitals. So that may be a government hospital or a private hospital or nursing home. If it is not maintained by employer, then technically now we have two cases. It will be a government or government approved hospital, or it must be a private nursing home or a hospital. So in that case, point number 2 says reimbursement of expenses incurred by employee on medical treatment in any hospital maintained by the government, local authority or approved hospital by government. So again, this is exempted if you are taking treatment in government hospital. B point, in respect of prescribed disease in any hospital approved by the Chief Commissioner or Principal Chief Commissioner in respect of any illness relating to COVID-19 subject to conditions notified by the central government. So other than government hospital, if it is approved by Commissioner of Income Tax or Principal Chief Commissioner, then also any disease, if reimbursed by the employer, that is going to be exempted. Again, we all know about the COVID. Again, if there is any treatment regarding COVID, that is also going to be exempted if the expenses have been borne by the employer. However, in order to claim the above benefit in case of prescribed disease, the employee shall attach, you have to show the proof that yes, that much amount have been spent on and that has been reimbursed by the employer. General points, you can read it of course over here. Premium paid to effect an insurance on the health of employee. If employer is paying your health insurance premium, that is going to be exempted. If employer is paying your health insurance premium of you or family, again, that is going to be exempted. Nothing is going to be taxable. Fifth point is very important. If there is a reimbursement of expenses, remember, if hospital owned by employer, exempted. If government hospital, exempted. If a specified disease and government approved hospital, exempted. Health insurance premium, exempted. Health insurance of family members, exempted. But if you are taking a treatment in a private hospital or nursing home, which is not maintained by employer, not government hospital, not approved government hospital, it's a normal, technically private hospital. In that case, there is no exemption. If employer spent 1 lakh rupees on your treatment and you are in a private hospital nursing home, then whole 1 lakh will be treated as your perquisite and it's going to be taxable in your salary. So reimbursement of expenses. Earlier, there was exemption of 15,000 rupees from private hospital that has been omitted, that has been removed. Fine. So reimbursement of expenses incurred by employee on medical treatment, it repeats twice, from any private doctor is full taxable. So you can technically understand it. Private doctor, it's a nursing home, it's a hospital, etc. Any expenditure incurred by employer. Now, 6th point is very, very interesting. Now it says, what if you are going to take medical treatment not in India, it is outside India, and the expenses is going to be bear by the employer. So if you are taking the treatment outside India, an employer say, yes, I will bear the expenses. So technically, there will be 3 kinds of expenses. One is traveling expenses, going out of India and coming back. Second is stay expenses, accommodation, where you stay, etc. And third is treatment expenses. So government says, or income tax, because it's very emotional, it says you cannot go alone. You are in, if somebody is like a patient, he cannot travel alone. He or she cannot travel alone. So exemption is for the patient and plus 1 attendant. So the expenses technically paid by employer for stay outside India will be exempted for patient and 1 attendant. The expenses of travel outside India of patient and of course one attendant is also exempted, and the treatment expenses of patient and only patient. Of course, treatment is not going to be done on attendant. So stay and travel expenses of patient plus attendant exempted, but the treatment of course is for only patient, so that is exempted as per RBI specified limit. So RBI will specify what amount of exemption he can claim, because he need to show the bills, etc. So whatever amount is approved by RBI, only that much amount can be claimed as exemption under this. So point number 6 says any expenses incurred by employer on medical treatment outside India. That is only for, of course, the patient, etc. Travel and stay abroad of employee and one attendant. Employee and one attendant. You might be one of you or some of you might be aware of the Yuvraj Singh. Yuvraj Singh has cancer, and because he was an employee of BCCI, on behalf of BCCI, all players play. So for cancer treatment, he went outside India, and all the expenses have been borne by the BCCI. And you might have remembered that his mother was only with him, because only one attendant was technically allowed. So Yuvraj Singh, expense of treatment borne by the employer, stay and travel expenses of Yuvraj Singh and his mother has been borne by the BCCI. So if you want to relate it with a practical example, then the Yuvraj Singh technically was the practical example of this situation. You might be remembered about this. However, the expense on travel will be taxable if the GTI before including such expense exceeding rupees 2 lakh. It's again a very important point. The travel expense is going to be taxable if your GTI exceeding rupees 2 lakh. The expenses of stay and treatment will always be exempted as prescribed by RBI. But your travel expenses will be exempted. But if your GTI exceeding 2 lakh rupees, then travel expenses is going to be taxable. Next is payment of premium on personal accidental insurance. Again, this is a kind of accidental insurance policy premium. And if it has been paid by employer, again, it's going to be exempted. It's not a perquisite. Perquisite taxable only in the hands of a specified employee. Now, there's a concept of a specified employee and non-specified employee. There are certain perquisite, those are going to be taxable in the hands of a specified employee only. All other is going to be taxable for all kinds of employee, but some of them is going to be taxable for specified employees only. A general provision I can make you understand. Then if any perquisite in the name of employee, if there is any obligation we can say is in the name of employee. That means the bill generate for any obligation in the name of employee, but paid by employer. That kind of perquisite will be taxable for all kind of employee. But if bill is generated in the name of employer and the facility is using by the employee, and of course payment made by employer, in that case, generally those perk is taxable only for a specified employee. This concept will come again one by one when we will discuss following perquisite. So it says that perquisite taxable only in the hands of a specified employees are this. Before starting the perquisite, those are taxable in the specified employee. We need to understand the definition of what is a specified employee and what is non-specified employee. After this, I will take the queries. Fine. Very simple definition. It says you will be treated as a specified employee if you fulfill any one of this condition. You will be a specified employee if you fulfill any one of this condition. Remember, any one of them. First one, you are an employee plus director of a company. Director of that company, of course. Fine. If you have substantial interest in that organization in which you are working, of course. So if you have substantial interest in that organization in which you are working, can anyone tell me the meaning of substantial interest? You must have this read this provision in your introduction topic, the definition topic, which might have been taught by your earlier faculty. So I need to know if anybody knows the definition of substantial interest. Can you tell me in short? I'm waiting for your answers. Let me see how many of you know about the substantial interest concept. Mahima asking, sir, once again explain formula of finding available. Kindly, Mahima, scroll back the video and you can see it how many time, number of time you want. Okay, Chanchal is from Bilaspur, Chhattisgarh. Very good. When you discuss homework question of last session, Priyanka, I've uploaded the notes yesterday and in which I have sent the solution of all the MCQs, numerical MCQ we discussed in our last session. So kindly go on to the portal, download the assignment, see the solution, and if there is any query, I will definitely going to help you. Somebody was asking me the question 4 also, Aman, I guess. So Aman, you should also go on the portal, download. Yesterday, I uploaded the assignment section. Kindly saw the solution and the last of the MCQs. And if there's any confusion, problem, query, etc., I am here. I'm not going anywhere. Okay. Krishna is rule 2B. If the government route is long but fare is low, but the actual expense, whatever it is, Krishna, does not matter. Income tax has nothing to do with this. Income tax just need national carrier expenses and actual amount spent. It does not matter the route is government what, etc. It will be given in question. So these kind of question, the route is that, etc. It is government problem. For solving a numerical, we will be given. Technically, we will be provided with the information what we need to solve in the examination. Okay. Okay. Next query is, what if he do combination of air, train, public and non-public transport? Yes, it can be, but you have to solve it in a separate part. The distance he covered via aircraft, you need to solve the exemption as per that provision. Then after, if he also use train for that connection, you need to apply train provision, then the public transport, then the other. Technically, this kind of question not be framed in examination because same kind of solution. What will examiner do? Same kind of 4 calculation, same provision. That is not good for a C examination because the difficult you think is to solve a question paper. It's more difficult to frame a question paper, because the examiner, the paper setter need to find from the whole study. 60% belongs to your income tax part. So he needs to find from the whole study 16 marks questions. And that 60 marks question must be that kind of question which can evaluate that those students are appearing in the examination. Are they really that much capable to clear that examination? So imagine how difficult it is to cover in 60 marks the whole study, theoretical, numerical, all these chapters question. So if an examiner is providing, setting a paper for CA, so he will actually might be more comfortable for asking you 4 different questions for 4 different calculation of different provision, not 4 calculation of the same provision in the same question. So that is, of course, not going to be happen. But if there is this kind of concept, then you need to solve it separately. Okay. So the journey is from vessel. So vessel, I guess, do not fall in the public transport. So it will be solved as per the last condition, then where no public transport is exists, because vessel is a private kind of transport available to us. But if it's a public transport, then you can think about it. Take a question on LTC. Dhyanish, LTC is very simple. Very, very simple. And we will take an example. Of course, there is an example in study material. We will discuss it again. Sir, when Shruti is asking, when employer is in hospital, then the hospital bill is paid by company or government. How would I know? If employer is hospital, then he will pay his bill himself, or his company can pay if there is a policy. And if employer is paying the bill, or employer medical facilities bill is paid by someone, then understand it will not fall in the category of salary chapter, because he is the employer. Salary provision, salary chapter will be applicable only when there isn't some employee. So I am the owner of my firm. If I am going to be hospitalized and I am paying my bill, so there is no concept of salary chapter, of course. Okay. Next is Mahima Maurya is asking what? This is only government. I don't know in what reference you are asking. Point number 13, point number B is written any hospital. Why not private is not written government? It's approved by Commissioner of Income Tax, etc. Then the exemption can be claimed, whether it's private or of course it's government hospital. There's a memorial hospital like that. So those are approved by government. In that case, exemption can be claimed. Like Tata Cancer Memorial Hospital, etc. Those are for public benefit. So if you are approved by the commissioner, then exemption can be claimed for specified disease only. मोहम्मद वोरा कौन सी अमाउंट पर हम मार्जिनल लीव कंप्यूट कर सकते हैं? मार्जिनल लीव वोरा फर्स्ट चैप्टर का पार्ट है। आई गेस आपकी पहली फैकल्टी ने वो अच्छी तरह आपको बताया होगा। तो मार्जिनल लीव हम लोग यहाँ डिस्कस नहीं कर सकते बिकॉज वो हमारी सैलरी का टॉपिक नहीं है। ओके, व्हाट इज जीटीआई? इट्स ग्रॉस टोटल इनकम। जीटीआई इज ग्रॉस टोटल, ये भी फर्स्ट चैप्टर का पार्ट है। I guess this question should not be asked, Shruti, because it's a very basic question. It's part of your first chapter. That means total of 5 head of income, etc. That is called technically gross total income. Okay, so somebody answered me about the substantial interest. Yes, Mr. Kojema. Sorry, your name is very difficult. So 20% of voting power. If you have 20% or more voting power in any company, then it is treated as substantial interest in your company. Okay, Ganesh Das is from Patna. Wow, beautiful place. Shareholding more than 20%. Ganesh is saying, please say equity shareholding or voting power 20% or more. And it's not more than, it should be 20% or more. If you have 20% exactly, you have substantial interest. Okay, 20% holding a good amount of share. Who is saying this? Pranav, what is the meaning of good amount share? What is this? What is this good amount of share? It's a fixed percentage, that is 20% or more. Okay, somebody is saying 25%. No, it's 20% or more. Who was saying? Sudhansh, of course. Person having reasonable voting power, do not give this kind of answer. Reasonable, good amount. No. It's a 20%, of course. I guess section 218 definition of substantial interest. No, 218, no. It's 232. 218 is for company in which public are substantially interested. Section 232, that is for substantial interest, I presume. Okay. Next is, okay, so the correct answer is, of course, if you have 20% or more, if you have 20% or more voting power, that comes with the help of equity shareholder, of course. So if you have 20% or more voting power, then it will be treated as substantial interest. But if you are not in a company, you in a partnership, etc., then 20% or more profit share. That will make you a substantial interest employee. So if you are an employee in a company and you also hold 20% or more equity share of that company, then you will be treated as a specified employee. The last is says if you have monetary salary payment of 50,000 or more per annum, monetary payments you are receiving 50,000 or more per annum in an organization, then also you will be treated as a specified employee. So you can see this is a good condition. Director of a company, it's a huge thing. If you're having 20% or more, it's a very huge thing, but this is very simple condition. And from my view, every employee is going to be fulfill this condition. Technically, if you are earning 5,000 per month, that's a watchman is earning nowadays. So if you are having 5,000 per month from an employer, technically you have 60,000 per annum cash salary. So you will be a specified employee. So technically, practically, all employees are a specified employee, but provision says if you have cash salary, monetary salary more than 50,000 per annum, then you will be treated as a specified employee. So this condition technically makes everyone a specified employee. Why it's so low amount 50,000? Because government wants everyone need to be specified employee because all perks are taxable for specified employees. So if employee director, of course, substantial interest, employer whose monetary salary exceeding 50,000 during the previous year from one or more employer, how you will calculate the monetary salary? Basic salary, you might be remembered in initial stage. I taught you the ideal format for calculation of salary, and there was some point written by M. So basic salary you need to take to calculate the monetary salary, and then all monetary payments, taxable portion you need to take. That will be called a gross salary. need to deduct the deductions. What are deductions? We will discuss later. And whatever it's coming over here, that is technically your monetary salary. And let me tell you, all employees, technically, all employees are a specified employee. So until otherwise, it is specifically given in question that he is not a specified employee. Then you can see if the salary is 5,000 rupees of per month or more, then automatically he or she will be a specified employee. Now the valuation of perquisite, and technically I can say that this is very, very important topic of perquisites. Now we are going to study valuation of perquisite, some specific perquisite. When we discuss part A was perquisite taxable for all employees. The first point was rent-free house, and it has been written over there in the table that valuation provisions, refer valuation provision. So these are the valuation provisions of different perquisites, which has been discussed or which has been read by us in our earlier table. But that was written over here that please refer the valuation rules. So here is the valuation rules for different kind of perquisites. Fine. And these are going to be very interesting. Everything is interesting. So you have to be create your interest in study. When I'm saying that let's discuss the rent-free house provision, then if you have this kind of reaction, wow, now we will discuss a different provision and I will learn something new today, which I didn't knew from last 20 years, last 18 years of my life. So if you have this kind of feeling in yourself, wow, now we will discuss or we will understand rent-free house. What is rent-free house? I need to understand. I need to know this. So that is called interest in your study. So if you have that kind of feeling in yourself, you are definitely going to be a CA very soon. Fine, understand? So this kind of curiosity is to be there to understand the provision. Whether it's difficult, easy, it's different. But if you want to understand something, if you want to do something, we can do wonders. Okay. So first is rent-free house. Then we will discuss motor car. These two are the utmost important perquisite valuation rules. And from my point of view, if the question has been framed of salary, then these two will be there in each question. If there's 10 question of perquisite, in all of them 10 question of perquisite, there will be treatment of rent-free house going to be asked and motor car also. And they are, of course, important. That means they are difficult. And nothing is difficult if we have interest in that. So we have very much interest in that. And let's see how it is. First off, we are discussing rent-free house perquisite. Valuation of residential accommodation. What is rent-free house? If you join a job, of course, and an employer said, or there's a policy that company will bear your rental expenditure. So company can do that via house rent allowance. In that case, they will provide you a certain amount of money. That this is 10,000 per month. Find accommodation, live there or live it in your own house, whatever it is. We do not care. We are going to pay a certain amount as per your scale of course, salary. And that will be house rent allowance. So we have discussed the provision of house rent allowance already. But the second choice, companies say, no, we're not going to pay any monetary thing to you. Company has certain number of flats or places. You go there and you can stay there without paying any rent, free of cost. Or we will charge you some nominal amount or whatever it is. So in that case, now you're not getting any monetary thing. You are getting technically a house to live in. And that is called rent-free house. As the name suggests, rent-free house. There is a house, you are living, you need not to pay any rent. So now you understand, employer is giving you a house to stay. Now we need to know, we need to find out what amount is going to be taxable as a perquisite, because you have something using for your personal purpose, which is reimbursed by your employer. So that is going to be taxable as per the provision. We are going to discuss one by one. Let me show you the provision ones. This is case number 1 in case of central government or state government employee. I am not discussing with you, okay? I am not discussing, I am just showing you. Just see that. Case 1. Now we have case 2 in case of other employer. Can you see the table? Fine. Now case 2 has some note number 1, 2, 3. Then we have case number 3 for rent-free house. That is value of furnished house. Okay. Then case number 4, we are still continuing with rent-free house. Value of accommodation provided in a hotel by government or other employee. Fine. This is case number 4. It's still not done. Not done. That is case number 5. You have more than one rent-free house, same time. Then we have note. Then we have one more note. And then we have general note. Now, this is where technically rent-free house provisions ends. Why I was saying that rent-free house and car perquisites are very important because they have certain kind of complicated provision. And if I'll ask you that let's read or try to understand these provision with the help of these provision which has been written by me over here, right? Or from your study. So you will feel it very difficult because there is like very permutation, combination, connection. In this case, it will happen. In that case, that will be happen. So I just made it easy for you. We will discuss rent-free house provision with the help of a chart. The chart I have already I will upload, of course. I will upload after our 4th session because if I'll upload it today or yesterday, you might going to read only the chart. The chart is for your help. So I'll discuss it all provision over here first. Then I will upload the chart so you can copy it from there. So let's move on to our whiteboard. So are you all ready to understand the provision of rent-free house? I hope yes. So moving on to our rent-free house provision. There are technically 5 cases, but one thing is very much I am sure. In examination, not all 5 cases going to be asked in one question. In one question, only one case will be asked. So you need to understand all the 5 cases, but you need not to solve all 5 cases in the same question. Okay. So rent-free house. I have told you the concept of this. What is the meaning of rent-free house? Okay. Now the concept. It says whether your house will be unfurnished, which has been, of course, provided by an employer. It will be unfurnished or it will be furnished. We understand the meaning of unfurnished, furnished. With furniture, you will be given a house to live, or might be only the house will be given to you. Furniture you need to arrange yourself. So first of all, we are discussing that if you have been provided with a unfurnished accommodation, unfurnished. So it says there will be 2 cases. Case number 1, case number A. That is, you might be a government employee. So rent-free house technically one of the most complicated perquisite of salary topic. But because you are government employee, so everything is easy for you. If you're a government employee, gratuity exempted, leave encashment exempted, pension commuted exempted, retrenchment also exempted. So if you are a government employee, so there is easy to solve the numerical. So the numerical does not belongs to government employee generally in your examination. So if you're a government employee, it's a taxable value will be as per license fees or rent as per government rules. And that license fee or rent as per government rules will be provided in question. So you can easily solve the numerical. For example, if it has been given in question that you are a government employee and you have been provided an unfurnished rent-free house, license fee is 2,000 per month. So what is the taxable value? 2,000 per month into 12, that is 24,000 and solved. And we passed. And we are a CA. No, we are not a CA. We are not passed because this type of question is not going to be asked in your question because it's CA, not BA. Okay. So now case number B. That is, we can say case number 2, of course, also. This is 1, this is 2. We have total 5 cases. I can say case number 1, case number 2. This is for other than government employee. In case of other, now technically, understand, in case of other, the house which is actually provided to you, by the employer. It's very easy to understand if you will connect it with logic. If you are a government employee, this will happen. And but if you are not a government employee, in that case, the house has been provided to you by employer. So employer might be the owner of that house. So that house, employer is what? Owner. He owned that house. So that companies own that house, and they ask you that you could go there and you can stay there. Or employer is not the owner. That house with the employer on rent. Employer took a flat on rent and asked you that you can stay there. You need not to pay rent. Rent will be paid by the company to the landlord. So the house you are using as an accommodation, which has been provided by employer, it's very logically might be owned by the employer or it is on rent by the employer. So if it is owned by the employer, then in the city in which this is provided to you, now we find out the population. We do not need to find the population, it will be given in question. If population is exceeding 25 lakh or population more than 10 lakh, but up to 25 lakh, and if it is up to 10 lakh, there will be three scenarios in which you need to find out the taxable value of that perquisite. So, what is the story? If you fall in the other employee category and the employer has been provided with you a house which is owned by the employer, then we need to find out the population of that city in which the house has been provided. If population exceeding 25 lakh, then taxable value will be 15% of salary. 15% of salary for that time house is occupied. For example, house has been provided to you for 8 months. Then we need to find the 8-month salary and 15% of that 8-month salary. If you have been provided with a house for full year, then the full year salary, 15% will be taken as taxable value. If population is this, then this value will be now 10% of salary. Only percentage will change. And if population is up to 10 lakh, then this percentage will comes to 7.5% of salary. That is easy. Nothing is difficult. What is unfurnished government employee license fees taxable value? Cool. Other case, if house is owned by employer, population will be given in question. If it's more than 25 lakh, then 15% of salary. If it is up to 25 lakh from exceeding 10 lakh, it's 10 or it's 7.5. You need to just find the salary and 15, 10 or 7.5 will be your answer. But if it is on rent, if employer has taken that accommodation on rent and you reside in that case, taxable value is very simple. Now population is irrelevant. Population is relevant only in case of owned houses. In case of rented houses, in case of any city, the provision is same. 15% of salary or rent paid by employer. Whichever is lower is your taxable value. Clear? So in case of other, if it is owned, then 15, 10 or 7. Or if it is on rent, then only 15% of salary or rent paid, which is given in question. Lower will be your taxable value. Clear? Now, that's the way we find out the rent-free house of a unfurnished. This is case 1 complete, case 2 complete. Now, furnished is case number 3. It's again easy. Everything is easy if you understand in a proper way and a correct guidance. Now, if there is a question which says that you have been provided with a furnished house, that means you have technically having the house as well as the furniture also, which is also provided by the employer. So now how we will solve it? Again, it's very simple. Furnished case also, whether government employee case or whether other, that might be belong to the government employee case or other. So first of all, in case of furnished, first of all, we need to find out the value of unfurnished. We need to calculate two values, the house value plus furniture. So for the house value, we need to find out it as per unfurnished case. If it is a government case, then we need to take the license fee, etc. Same provision. If it is other case, then we need to find out is per these provision, same provision. There is no difference. So if an examination furnished house is coming, then technically we need to solve this provision also. First of all, you need to find out the house value. What we need to add? Just the furniture perquisite value. So in case of furnished house, first point will be same as per unfurnished, as the case may be. We need to add the furniture value in this house value, and that will be your answer. Now again, the furniture provided by the employer will be of two types. If employer is providing you bed, home appliances, TV, fridge, etc. So if he is giving you TV, then company or employer owned it. Might be they owned it and provided it to you. So if they owned it, then we need to add 10% of actual cost. Underline the word or understand this word, actual cost of that furniture value. For example, employer provide you a sofa for 1 lakh rupees actual cost. Then we need to add 10%. That means 10% per annum. So 1 lakh rupees, 10% per annum is 10,000 rupees need to add this unfurnished value. And if it has been provided for only 6 months, then that's 10% per annum. You need to do it half. Then in that case, 5,000 is going to be add in this value. That is 10% per annum. So we need to add 10% of actual cost of that furniture which has been provided by your employer, or it might be on rent. Employer give you some furniture on rental basis. That means employer took that furniture on rent and provided to you. Employer provide you a sofa on cost basis, on owned basis. The cost was 1 lakh, for example. So we put the value of 10,000 over here. And some other furniture like air condition, like fridge, that has been provided to you by employer, and employer is not the owner of that furniture. They bring it on rent. Rental value was 2,000 per month. For that furniture, we need to add 24,000 in your unfurnished house value. Add these, and that will be your answer for your furnished provision. So there is very simple concept. For furnished also, you need to find out the unfurnished value first. And then for furniture purpose, we need to add 10% per annum of actual cost. Always remember, examiner do what? Examiner will provide you rent-free house for 8 months, 9 months, 10 months. And if it is 8, 9 or 10 months or other than fraction of any months, then understand the furniture value 10% per annum. You should not take directly 10% per annum because it's 10% per annum. But if house is provided for not full year, but for some months, then you need to proportionate this value also. And if rent is per month and house is for 8 months, then again we need to take rent of always 8 months, etc. So we have completed furnished case 1, case 2, case 3. Now moving on to our other case, case number 4. All provision diagram I will provide you, and provision has been already specified in the notes. We will discuss it after this concept. So now case number 4. Case 4 is very simple. It says if your employer provide you accommodation in a hotel. Why in hotel? It happened like this, like you working in Delhi and you technically lives in rent-free house, which has been provided by your employer in Delhi. Now your job has been transferred to Mumbai, and now you are going to Mumbai. Now you reach Mumbai, an employer will provide you a rent-free house. So employer asks you, until we are providing you a rent-free house, stay in a hotel, guest house, etc. as specified by employer for some days till we are arranging a rent-free house for you. So in that case, that hotel That hotel is treated as your temporary rent-free house. So if your employer asks you that stay in that hotel for 20 days, we will arrange a rent-free house, or 25 days or 30 days or 1 month or 2 months, and we will pay for it. Understand? If employer says we will not pay for that hotel amount, you need to stay in a hotel, pay yourself. We will not reimburse it also. So that cannot be a perk. Perk means your personal expenditure, and it's paid by employer. So is there any personal expenditure which is borne by you and employer is not going to reimburse it? That cannot form part of your salary perk. Of course. So employer now provide you accommodation in a hotel. So that is technically kind of a temporary rent-free house. How we will solve it? So provision says 24% of salary need to be taken, and 24% of salary need to be proportionate days. For example, you have been given for 20 days. Hotel accommodation is for 20 days. Then how we will find out the 24% of salary? It says, first of all, you need to calculate the salary for the whole year. Full complete year salary you need to find out, and then 20 upon 365. This is how we need to come on this value. You need not to take directly 20 days salary. First of all, you need to find the salary for whole year. Then you need to do it as proportionate number of days. So 24% of salary or amount paid by employer. That 20 days hotel rent, whatever it was, paid by employer, whichever is lower is your taxable value. Clear? So if the accommodation is provided in a hotel, then in that case, 24% of salary or amount paid by employer, the lower is going to be taxable. But if that accommodation is up to 15 days, that means you stay in that hotel and you find a rent-free house. Rent-free house has been provided by the employer within 15 days. Then this perk will be exempted. For example, if a question is given, hotel accommodation is for 10 days. What is the taxable value? Exempt. 14 days, exempt. 20 days, then it will be taxable. And remember, full 20 days value will be taken, not the days exceeding 15. You cannot take over here 5 days. You need to take the 20 days salary once it exceeds the 15 days. So if you stay for 16 days, then we will take 16 upon 365. Again, that is easy. That's a simple calculation, 24% of salary. Now, what is the meaning of salary? That is very important for the purpose of rent-free house. Whether it case 1, case 2, case 3, case 4, case 5, whatever it is. In every case, the main factor is salary. Otherwise, it's very simple. You just need to take salary of 15% or 10 or 7.5 or 24%. There are 4%, 10, 15, 7.5 or 24. So we need to find the meaning of salary. Is it gratuity C case? It's gratuity B case. It's something else, etc. So this salary has a separate exclusive meaning. And that is only the thing you need to find out in the question. And it says salary means all monetary payment. Salary means all monetary payment we need to consider. All monetary payments. That means if I can show you it like this, so that will be really easy for you. In the initial stage of this class, session 1, this was the ideal format. And that really helps you. So what we need to take as a rent-free house salary, it says you need to take all monetary payment. This, but you cannot take advance and arrear of salary because we need to take the salary due, basic salary. We need to take all monetary payments except advance salary, arrear of salary, because it does not due during the year. We can only take only that basic salary which is due during the year. So advance is related to next year, arrear is related to preceding years. So we will take all monetary payments, but we will not take advance salary, arrear of salary, and out of allowances, DA non-term portion will not be taken into account. So this is the total we are talking about. We not need to take any non-monetary payment. We only need to take this total, this Basic salary, advance, skip, arrear skip, all taxable portion of gratuity, pension, etc. Again, this is received generally after service. Gratuity, pension, technically we receive it after service. And rent-free house we will be have only when we are in service. So technically they are monetary payment, but technically cannot be included for calculation of salary for the purpose of rent-free house until otherwise. These compensation received during the service. So practically they always receive after service. So after service, we do not have rent-free house. So technically we need not to take them also. So if I'll say, what is the meaning of monetary payment? So we can say total monetary payment from 1 to 6. This is our point, 1 to 6. 1 to 6 payment, exclude arrear of salary if it is included, exclude advance salary if it is included, exclude DA non-term. That means only which DA will come? Term. So if DA is non-term, exclude and exclude the compensation. Practically compensation point will not be applicable because we are going to receive after service. And rent-free accommodation will be solved only when we are during service. Clear? Moving on to our provision again. As I always said, numerical topics can be understood clearly only when you try the numericals. Fine. So at the time of leave-in encashment, we find it very difficult, but when we try example, it's easy. At a time of gratuity, we find it very difficult, but when we solve the example, it's easy. So again, rent-free house is very, very easy. You just need to know which case is applicable and the percentage. And if you find out the salary correctly, the work is done. So I can tell you the definition of salary like this: all monetary payments, like from 1st to 6th in our format. Fine. Except what we do not need. Arrear of salary, you should not take it in there, of course. Advance salary and DA non-term. So in short, you can understand the meaning of salary is this. It has been written in notes also. Okay. So rent-free house, case number 1, 2, 3, 4 has been done. We discussed the meaning of salary also. Now case number 5. Case number 5 is not a new case. It's the same case. There is nothing new. It's the same case we actually discussing. Just have a new situation. It says, for example, this happened that Mr. A reside in a Delhi. Employer has been provided a rent-free house over there. And the taxable value, we assume the taxable value is 10,000 per month. Taxable value. As the case may be like 15%, whatever it is. Now, employer asks Mr. A to move on to Mumbai. Job has been transferred. And on 1st August 2022, he has been shifted to Mumbai from 1st April 2022 till July. He was in Delhi. And after that, from 1st August 2022, he moves on to Mumbai and got a rent-free house. So generally what happens when we shift into the other city, we vacate the old house and we occupied the new rent-free house. But there can be situation where a single employee can hold more than one rent-free house. For example, how? Might be his family is living in Delhi and his children examination is due. So he asks to the employer that I am shifting to Mumbai from 1st August 2022, but my family will shift after some time. So till that time, I will occupy that rent-free house in Delhi also. So there can be practical situation where it can be happen that a single employee having more than one rent-free house. So from 1st August 2022, he occupied the rent-free house in Mumbai also, and the taxable value, say for example, is 12,000 per month. How we will find a taxable value is normal provision. Delhi taxable house, we need to find out is owned by employer or non-rent. If owned, then 15%, or if in rent, then 15 or rent paid. So normal provision taxable value. And Mumbai tax value you find out as per the normal rent-free house provision. Now what will happen? The income tax says that if someone has two residential or two rent-free house at the same time, then for 90 days, or we can say 3 months, only one house taxable value is going to be taxed under salary as a rent-free house. So technically, income tax department is giving you the benefit. You are occupying two houses at the same time, but department says we will provide you the benefit that lower of both rent-free house, lower of both will be taxable for 3 months. So lower is like Delhi rent-free house value. So 10,000 into 3 is taxable for 3 months. What 3 months? From August, because he has two rent-free houses starting from August. August plus September and October. For these 3 months, taxable value will be this. He vacate Delhi rent-free house on 1st January 2023. So technically, he is having two residential house from August till December. That means August, September, October, November, 5 months he is having two rent-free house. So income tax gave exemption that for 90 days, or technically we can say 3 months, only one house value will be taxable. But after that, if you did not vacate, then both house taxable value will be taxable. Like now from November and December, Delhi house value 10,000 plus 12,000 is Mumbai house taxable value. Both is going to be taxable for you. That means 44,000. And from January, of course, now Delhi house has been vacated. So from January till March, only 12,000 is going to be taxable. And from April till July, he was only having Delhi rent-free house. So April, May, June, July, for 4 months, this value is going to be taxable. So there is no new provision. I am not telling you any new provision. How we need to find the taxable value as per the case number 1, 2, or 3. It's just a procedure which says that if it happens that some employee having more than one rent-free house at the same time, then for that duration. So what provision case number 5 I am teaching to you is just for this 5 months. Because from April to July, normal provision, one single rent-free house, you need to taxable it. From January to March, again, it's a simple provision. So the time duration, at that time, when you're having more than one rent-free house, in that duration, this case number 5 applicable, and said for 3 months or 90 days, lower of both will be taxable. Lower of both rent-free houses is going to be taxable. And after 90 or 3 months, both houses taxable value is going to be taxable for your salary purpose. So those are our 5 cases. And let me tell you, if you'll read them theoretically from your study material or notes or from Act, you will get confused when I need to apply which case. But with the help of this diagram, this chart presentation, that is going to be easy. I promise that is really easy. If you revise it once, you will learn it by heart. One thing you should make sure that salary calculation should not be wrong. If your salary calculation is wrong, then everything is going to be wrong. So salary calculation, I also told you, is very simple. All monetary payments, everything except area, advance salary and DA non-term. You should exclude DA non-term, advance area. Compensation, of course, will not form part of that salary. Moving on to the provision where everything has been written for your help. Over here. So now I am not going to teach you these provisions, the theoretical provision, because now you can read it and you can find that everything has been written very easily in the diagram. Like I can just guide you that case number 1 is government employee, license fee or rent actually paid by license fee or rent is given in question. Second is other employee, nature of accommodation. It's a population more than 25 lakh, and if it is owned, then 15% of salary. Population is more than 10 but up to 25, then 10% of salary if house is owned by employer, and it's 7.5%. If it is not owned, if it is on lease or rent, then same provision will be applicable, 15% of salary or rent paid, Population is irrelevant. 15% of salary or rent paid, 15% of salary or rent paid, whichever is lower. Note 1 describes the definition of salary. Salary includes all monetary payment, but in case of allowance, DA only that part which is for retirement benefit. That means term. That is only included. So DA term only need to be included. So that means DA non-term is need to be excluded. Okay. Advance and arrear of salary will not be included. Salary to be commuted on due basis. That's why we already take basic salary, not arrear, not advance. For the period for which rental accommodation is occupied by the employee, where employee received salary from more than one employer, this is employer, then the aggregate will be taken. This will be applicable in case where you are employed with two employees at the same time. Okay. That is not that important. Third is point for hotel accommodation, furnished accommodation, value as per the house is unfurnished, as per chaos B, 10% per annum of original cost of furniture or hiring charges as the case may be. Case 4 is for hotel accommodation, and that is 24% of salary, proportionate number of days. First, you need to find out the 24% of salary paid or payable for the year. Then you need to proportionate number of days. Actual charges, if it is not exceeding 15 days, this perk will not be taxable. Case 5 is if you have both rent-free houses, then for 90 days, lower of one of them will be taxable, and after 90 days, full value is going to be taxable. Note is very important that nothing for rent-free house is taxable if following conditions are satisfied. If following conditions are satisfied, that is the house is located in a remote area. It is provided to an employee working on a mining site. So if you are having a rent-free house which is in remote area, and that's a working site, like if it is a mines of coal, gold, diamond mines, so employee need to stay there only. And the house is already provided there. So it's a very remote area, and they are technically not a rent-free house. They are for their official work. They cannot commute between city and that mining site. So in that case, rent-free house will be exempted. Definition of remote areas over here. You can read it over here. General note is very general and very important. Very, very important. It says that if for any perquisite, whether it's rent-free house or any perquisite, any amount has been charged from employee. For example, you are government employee, license fees 2,000 rupees per month. Rent-free house has been given. So taxable value is 24,000. But government department says that employee need to pay 500 rupees per month for rent-free house. 500 rupees per month. Now perk value will not be 24,000 because 500 rupees per month, that means 6,000 rupees has been charged from you for the benefit of that rent-free house. So 24,000 minus 6,000, the taxable value will be the 18,000. So perk means the amount you get free of cost. So if any amount has been charged against any perquisite, then it will be reduced from the taxable value of that perquisite. For example, in case of our rent-free house, other than government, for example, your salary is 10 lakh rupees for rent-free house purpose, all monetary. And you live in Delhi for whole year. 10 lakh rupees salary, you live in Delhi for whole year, then 15% of salary will be taken. That means 1,50,000 is a taxable value. But if it is written in question that employee need to pay 5,000 per month for this rent-free house, in that case, now 1,50,000 will not be taxable. It will be 1,50,000 minus 5,000 per month. That means 60,000 in a year is going to be deducted, and taxable value will be 90,000. It's just like same as a company say that this 100 rupees item is free for you. You not need to pay anything and it's free. So that's 100 rupees free value. But if say 100 rupees article is free for you, but you need to pay 10 rupees for it. So then now free is not 100, it's only 90 rupees. So this general is applicable for all perquisite. That's why I'm again repeating it. It's applicable for all perquisite. If any amount has been charged for any perquisite, then that is going to be reduced from the taxable value of that perquisite. Clear? So we done technically the rent-free house provision, then we will move on to our motor car perquisite. And we will move on to this perquisite after the break. So let's have a break for 10 minutes and we will resume our break with the motor car taxability perquisite. So you should have your tea, coffee, water, etc. And when we will resume with the very interesting car perquisite provision. Okay. See you after 10 minutes. Welcome back, everyone. Again, I hope you must have all your tea, coffee, etc., and must be looking forward to the next topic, and which is our perquisite section, free motor car perquisite or other automotive conveyance. So, what technically happened in case of car perquisite? Now, there was a transport allowance we discussed for your commuting from office to your residence and vice versa. So, if employer says, ki, I will reimburse your car expenses, then that will be treated as taxable perquisite for car facility. If employer is providing a cab, that cab will come to your home and it will going to pick you up and then going to remove and going to drop you back. In that case, that is 100% exempted. So that kind of perquisite we are not talking. We are talking about when you have car specifically given to you to use. That kind of car facility perquisite we are talking. Moving on to our notes, again, you can see this beautiful green car and you in this car, of course, when you will be a CA, you will be provided with a car, of course, with a chauffeur, with a driver also. So this is taxability provision. And again, I'm not going to teach you right now. I'm going to show you again how complicated these perk or this perk also. You can see the format. Car taxable in the hands of all employee. There are some cases in which it's going to be taxable for all employee cases. And then where it's going to be taxable for some specified employee. So this is the car perquisite, then the automotive conveyance, and then it ends over here, page number 32. So again, if you're going to read it with a paragraph sort of, with the provision or from the Income Tax Act, then it's very difficult to understand when which case is going to be applicable. But do not worry. Stay focused, relax. I'll teach you, I'll tell you how we can make it simple with the help of a diagram or chart. So let's start the journey of car. Let's see, some queries are here. Let me take the queries first, then we will discuss about this provision. Okay. हम लोग अभी क्वेश्चंस करेंगे. Of course, somebody is asking me कि हम क्या कुछ क्वेश्चन कर सकते हैं. तो of course we will do some question from study. First of all, need to complete this topic of car because it's a huge topic. I want to complete it today's session. So if the time left, we will discuss the questions from study, or we will do all the questions for next session, because for that next session we have only relief provision, that provident fund provision, and some small provisions there. So we will have a separate almost 40 minutes for the numericals, so for practice also. And that will really help you because you can revise the provisions of car, etc., and the whole salary chapter till today for our 3 sessions. So we can solve the questions, general question also, including all the provisions together. So if possible, if we will have time, I will discuss the questions today. And if we have short of time, then we will discuss the provision and we will take all the questions in our last session of salary. That will be day after tomorrow. Do not worry. I'll do everything fine. Yatiraj was asking, sir, 24% of salary means. So I've explained the meaning for rent-free house. What is the meaning of salary in case of rent-free house, Yatiraj? I hope now it's clear. DA non-term means, Kavita is asking, DA non-term means which is not as per retirement benefit. That part of DA which is not going to be included for retirement benefit, compensation, etc., it will be given in question clearly. Whether DA as per terms of employment or DA as per not terms of employment or for retirement benefit. Okay. Priyanka is asking, sir, have you ever been to Rohtak, Haryana? No, Priyanka, I have never been there, but someday I'll definitely come. Okay. Next is, can government company employees have substantial interest? Can be specified employee? Technically, who's asking this, Krishna? Every employee is a specified employee. Because of that monetary third limit, 50,000 per annum is that cash salary All government department is paying more than that, of course. But still, if you're a government employee holding 20% or more in that government organization voting power, then automatically you will be a specified employee there too also. Next is Krishna. Perquisite does not cover in calculation of monetary salary. Yes, perquisite will not be covered in monetary salary calculation. Miss Kavita is asking actual salary and gross salary meant difference. There is no word like actual salary. I don't know what is the meaning of actual salary. I know the meaning of gross salary and net salary or basic salary or advanced salary or area salary. There is no term I teach like actual salary. Okay. DA non-term means discussed. Break de diya hai. Sir, please take a revision of this topic from module also. I have done that. All these perks and allowances are going to be taken on tax slab basis as income of individual after including in salary. These are going to be taxed on different basis because it's one time receipt. Divanshu, all perk, allowances, etc. will form part of your salary income, your gross salary and net salary. So it will be taxable as your slab rate income. It does not make a difference that they are different kind of allowances, etc. It will form part of your GTI, and your salary is not going to be taxed at special rate because capital gain, casual incomes are going to be taxed at special rate of income, but salary is going to be taxable as slab rate of income. Kavita asking hotel wala point, explain it again. Kavita, आप YouTube पर हैं, आप उसे स्क्रॉल बैक कर या क्लास के बाद जब मना है जितनी बार आपका मन चाहे आप होटल वाला पर्क देख सकते हैं कि हम कैसे कैलकुलेट करते हैं. ओके. Next is somebody is asking Mahima, how we know that DA is not non-terms? It will be given in question. The DA is as per term or non-term. If question is silent, then always treat it as non-term. Remember, if DA is silent, then treat it as non-terms of employment. Okay. Next is actual meaning of perquisite. We have discussed in last session. What is the meaning of perquisite? It's a facility. It's an amount of your personal expenditure which has been paid by employer, reimbursed by employer. Right? Whichever is earlier means whichever is higher. Yes, for the purpose of basic salary, etc., we can say that. Whichever is earlier always mean whichever is higher. Okay. Alok is asking, please take a short revision before ending the class. Alok, we are on YouTube. You can take a long revision also after the class. As many times as you want, you can take the revision. This is not possible. We need to cover a lot of provision, huge provision salaries. You know how many pages in your study material for salary? More than 108, I guess. Fine. And the provision part is 80 pages almost. Except that revision part and of course the test knowledge part. So let me complete the provision first. Revision you can do it yourself. You are not kids. You are big persons. Big. Okay. So now moving on to our car perquisites. Fine. Let me tell you, car perk is quite complicated. It's quite complicated. But there is one thing which need to be understood. But you can easily solve it if you find the correct case. So what are the cases? This is most important to understand. So in case of car facility, there are two situations. When car is owned by employee, you need to understand what is technically perquisite in these sections. In car facility, you need to find out what is technically perk, because perk is mean personal expenditure met by employer. That will be called perquisite. So in different cases, we need to find what is technically the personal expenditure which is met out by employer in this situation. So car facility says if car owned by employee, in this case is going to be taxable for all employees, whether you are a specified employee or non-specified does not have any difference. And if car is provided by employer, in car facility, if car is owned by you, then it is taxable for all employees. And if car is provided by employer give you a car to commute from office till your residence and vice versa. This is only going to be taxable for a specified employee. So if a non-specified employee has been provided with a car by employer, then it's exempted in the hands of non-specified. So this case is taxable only if you are a specified employee. If you are a non-specified employee and this case is applicable, that is 100% exempt. And this case is applicable for all kind of employee, whether you are a specified or non-specified employee. Now, if a car is owned by employee, then what is the perk? The expenses. The running and maintenance expenses, the conveyance expenses, the petrol, diesel expenses, etc. So if car is owned by employee and expenses is also met by employee, that means you are using your car to commute from office to residence and residence to office. So car is yours and expenses is met by you. Your employer is not reimbursing it. So now what is the perquisite? Nothing. Not applicable. There is no perk, because perk is when your personal expenditure met by employer. And here, because car is yours and expenditure also paid by you. So in that case, you should not tell that there is a perquisite. There is no perquisite. If this situation comes in the question, it's very, very good for you, because you need to write just not applicable. But if expenses is paid by employer, now understand. In this case, this one, what is perk? Is it car or expense? The answer is expense, because car is owned by employee and your expenses is paid by employer. So technically, what is the perk? Perk is the expenses. So we need to taxable the expenses part. Now, there are three situations. Whether car use 100% for official purpose. If car is used only to commute from office to residence and residence to office, and it has not been used for any other purpose, in that case, that is not again a perquisite, because perk is when your personal expenditure paid by employer. And there is no personal expenditure, because car is only used for official purpose, expenses paid by employer. And if any expenses is paid for the purpose of employment, then it's not going to be a perquisite. So in this case, that is non-taxable. What if car is used 100% for private purpose? That means employer said to you that you use your car and all the expenses will be paid by me. And what you did? You did not use the car, even for once, to commute from office to residence and residence to office. You use that car only for your personal purpose, personal wants, and expenses reimbursed by the employer. Common sense says, what should be the taxable value? You yourself imagine. What do I need to taxable as a perk value? If all expenses is used for private purpose, that means 100% expenses are taxable, because perquisite value is 100%, because you use all the expenses paid by employer for the purpose of your personal reason. So 100% is going to be taxable. So I was saying to you, you need to find out which case is applicable. First of all, you need to see who owns the car, whether employer or employee. So if employee owns the car, then you need to see who actually paid the expenses. If employee, then no perk. If employer, then you need to find official, then no taxable. If it is 100% private, all taxable. And third case is both purpose. Practical life, this is applicable, of course. Generally, it's not possible to use 100% for private or 100% for official. So practically, generally, this case applicable. Now, this case have some special treatment. I do not have that space over here, so I am writing it over here. Both case over here. Fine. So if this condition applicable, then it says how to calculate the value of this perk. It says total expenses paid by employer, of course, whatever amount has been paid by employer, because this is total expenses cannot be taxable, because you used this car or these expenses for personal as well as official. So out of that total expenses, we need to deduct those expenses related to official purpose. Then the remaining will be your private purpose expenses, and that is going to be taxable. So total expenses will be given in question. Now we need to deduct actual expenses for official purpose. If it is given in question, it is not mandatory that it is given in question, because practically it's really difficult to find out. If I am using a car for both purpose, it's very difficult to find out that how much I expend on official purpose and how much I expend for personal purpose. It's very, very, very difficult. But if it is given in question, then we can find, like, we can write that value over here. That is actual expenditure for official purpose. Whatever the value, we need to write it inside the block. Then this is going to be compared with another value. It says now there is a government fixed value. So this is actual expenses for official purpose if given in question, which will be not given in a lot of question, or practically it will not be available. So government also knows, because this calculation practically is not possible. So they made a fixed limit. So if this is given in question, then this value or this second value is government value, which says if your car cubic capacity up to 1600 cc, it will be given in question that what is your cubic capacity. So if car cubic capacity is up to 1600 cc, 1600 cc, then 1800 rupees per month is fixed. We will take 1800 rupees per month fixed. If it is more than 1600 cc, then 2400 rupees per month is fixed. So one of them will be applicable, either 1800 or 2400. These two are exclusively event, mutually exclusive event. Either we will take 1800 or we will take 2400. Lower higher concept is not applicable, because if your car might be for 1600 cc or more than that. So out of these two, only one will be taken. And plus, if driver also, then 900 rupees per month for driver salary. So one value of out of this 2400 or 1800 will be taken. And if driver is there also, then this 900 rupees per month is fixed, also going to be added. So we will have this total value, this one and this 900. And we need to compare it with the actual value of official expenses, which if given in question. If given in question, then we will take this also. So we need to compare actual official expenses and this driver plus one of this value, and whichever is higher, remember not lower, whichever is higher need to be deducted out of this total expenses. I know it's slightly complicated. You might be feeling it right now, but it's very, very simple when it will be given in question form. That we will discuss, of course. This will be your taxable value. For example, in question it has been given, then the total expenditure paid by employer is 50,000. And the car is used 100% for official purpose. Then what will happen? Nothing is going to be taxable. If car is used 100% for private purpose, what is taxable? Full 50,000. And if car is used for both purpose, then what we will do? Total expenditure 50,000 we will write over here. And then actual expenditure for official purpose if given in question. Suppose in question it has been given, then actual expenditure was 15,000. Suppose. Clear? And now this limit has to be applied in every case. Whether this actual expenditure given or not does not matter. But this need to be calculated. Car capacity was assume 1000 cc and driver also there. So if 1000 cc, then 1800 rupees per month, and for driver 900. So this will be 2700 rupees per month fixed value. For the year, it will be 2700 into 12. That will be 32,400. So this fixed value comes 32,400, and whichever is higher. 32,400 will be deducted out of 50,000. Balance will be your taxable perquisite value, and that is 17,600. Clear? Suppose in question, actual expenditure is not given. Suppose this 15,000 has not been given. Then this 32,400 directly will be deducted from where? For example, there is actual expenditure costing is 45,000. Instead of 15, it's 45. Then we will deduct 45,000 out of 50,000 because higher need to be taken. And then tax value will be 5,000. So you might be feeling it quite difficult, but once you will read it and we will solve a question, it will be really easy. So first case, it was saying if car owned by employee and expenses paid by employee, then nil. If employer, full taxable, nil taxable. And in both cases, total expenditure minus official given, or this value of 18, 24 and 900, you need to be remembered. If car capacity, that will be given in question, then 1800. If more than 1600 capacity given, 2400. And if driver is given, then 900. If no driver, then only 1800 or 2400 will be taken. One of that value will be taken, and it will be going to compare with the actual expenditure, and higher is going to be deducted out of the total expenses. So that was the first case. That was the first case when car owned by employee. And technically you can see in the first case only that case is important. The last one. All other are very, very simple. Now car facility, second part. It is in two parts. Car owned by employee. We have done that. Expenses by employee. Employer. Three cases. Official 100%. Private 100%. And both. So out of these all cases, only this is very important. Otherwise, this is very simple. Nil. Actual. This says actual minus official given or government fixed value, what we have seen, whichever is higher, need to deduct, and the balance is your taxable value. So this we have already done. So now moving on to the other part, which says if car is provided by employer. Now again, if any asset has been provided by employer, then either the employer is owner of that car, like every asset, or it is on rent. Employer taken that car on rent and give it to the employee to use, or car is owned by employer and give it to employee to use it. Now if car is provided by employer, then again we need to see same case. Who is technically paying the expenses? Expenses either paid by employee or either paid by employer. So technically, if this is the case, then now suppose what is perk? Expenses paid by employee, but car is provided by employer. So in this case, technically perk is car. And I already told you this is only taxable for all employees, this case. And this case is applicable only for specified employees. So technically, in this case, if you can see, car is provided by employer, but expenses met by employee. So expenses is not a perk because expenses borne by employee, but the car is going to be a perquisite value. And now again, three cases, same, 100% official, nil taxable, universal rule, 100% private. Now expenses paid by employer. So I need to taxable the car value, and car is a asset. In all asset case, if it is given on use to employee, there is a same provision applicable, and it says taxable value will be 10% of actual cost of car. Remember, in case of furnished rent-free house, in case of furnished, when the employer provide the furniture is also an asset. Same concept, 10% of actual cost of furniture we add as a taxable value. And again, car is also an asset. So 10% of actual cost of car, or if it is on rent, same in case of furniture, rent paid by employer. No higher or lower, because one case will be applicable as the case. No higher, lower. Do not ask me higher or lower because as the case. Either car will be owned by employer. In that case, 10% of actual cost of car going to be taxable. And if it's not owned by employer, then whatever rent he is paying to the landlord, to the owner of that car, is going to be taxable value. So that was when 100% used for private purpose. Now the third case, it says for both. In the examination, the probability of both is technically more than the other cases because both cases are technically different. In both cases, it's now easy. Now the direct taxable value is fixed by government provision. If up to 1600 cc, you remember in the last case, we take 1800, 2400 or 900 to deduct it out from total expenses. But now we need to taxable it up to 1600 cc, then taxable value will be 1600 rupees per month. More than 1600 rupees, then 900 rupees per month. This is taxable value. Plus, if driver is given in question, then it's going to be 900 rupees per month for driver. Again, out of these two, only one applicable, either 6 or 9. And if driver is there, then this is the taxable value directly. You do not need to deduct it from anywhere. For example, both cases applicable. Then, if car is provided you for 10 months and it's owned by employer and expenses met by employee, and you use it for both purpose for 10 months, a capacity is less than 1600 rupees per month, 1600 cc, sorry, then 600 into 10, 6000 will be the taxable value of that car. And if cc capacity is more, then 9000 will be the perk value. If driver provided, then 900 will be added again for that value per month. Remember a very special thing I need to tell you in this case also. After rent-free house provision, there was a general note. What it said. After rent-free house, there was a general note. And it said, in case of any perquisite, if anything is recovered from employee, it needs to be deducted from the taxable value of perk. But that is not applicable in this case. In this case, this is fixed taxable value. Fixed taxable value by government. In both cases, fixed taxable value. If this is applicable, this is going to be taxable. Even if something is recovered from employee, that is not going to be deducted in this both case value because that is fixed by government value. Except this or any other fixed government value, one more will come in this case again. In two cases, you cannot deduct even if some amount has recovered from employer. So if car is provided by employer, expenses met by employee, then nil, 10% or rent, or this is fixed value 1600, 600, 900 and 900 going to be taxable. Now the last case left, and that is, this is the main perquisite. Now you can say this is the huge perquisite because now everything is free. Car is owned by employer. That means car is given to you by employer and expenses also met by employer. So now employer is giving you car as well as expense. In all other cases, only one thing is received by you. In this case, you only have car. In this case, you only have expenses because car is yours. But this is the main case in which you are getting car as well as expenses both. So now this case need to solve on the other page. Sorry. Fine. So car facility. Owned by employee. We have solved it. Now provided by employer. Expenses met by employee. We have discussed it, of course. Now expenses met by employer. We are discussing this case. Three cases again. 100% official, nothing is going to be taxable, of course. Nil. Then 100% private. Again, it's very simple. Now what we are receiving from employer? We are receiving from employer expenses as well as car and using it only for private purpose. So this is the most taxable value perquisite case because need to tax everything. Expenses, how much will be tax value? Total expenses paid by employer. Whatever expenses paid by employer will be tax value plus, because we are having car also. For car, we need to add 10% of actual cost, or if on rent, then rent value. That is going to be taxable. So this total is going to be taxable value. Or you can understand one thing. When in this case, we receive car and 100% is private, then 10% case or rent case applicable. This is taxable value. In this case, when expenses met by employer and 100% for private purpose, what will be taxable? All expenses. So technically, we are doing nothing. We are technically, the previous case's value is going to be taxable over here, same. What we need to do, because it is 100% used for private purpose. In that case, we need to taxable the whole amount of expenses paid by employer. And for car, the car case 10% or rent, both need to be taxable. So if I'll tell you this value and this value is going to be taxable in this, because we have both things available over here, expenses met by employer and car is also provided by the employer. So in that case, this is called the taxable value, and that's very easy. Now, if both case, this is again very simple. In both case, both case over employed, what we used to deduct, this is going to be taxable over here. In both case, taxable value will be, if up to 1600 cc, what amount we used to deduct over here? The amount we use for deduction in third case is going to be taxable over here. So there is no new thing. Up to 1600 cc, 1800 rupees per month now going to be taxable. More than 1600 cc, 2400 rupees per month going to be taxable. For driver, if available, then 900 rupees per month is going to be taxable. So if you will see, what we used to deduct over here, in this case, is technically exact value is going to be taxable over here. Again, this is a fixed case. Like this fixed case where we read 600 per month going to be taxable, 900 and 900. This is also a fixed case. In this case also, if any amount is recovered from employee, that cannot be deducted. In all other cases of all other perquisite, we can deduct it. Even if in this case, we receive any amount from employee, that need to be deducted. If in this case, it need to be deducted. If in this case, we need to deduct it. So that was the car perquisite. I personally believe, yes, it's quite complicated until you are not able to find the case applicable. Imagine just you need to taxable either expenses or the car value or the government fixed value. If you able to find the correct case, who owned the car, who met the expense, and car is used for, and if you able to find in which category I need to put it, then it's really easy to solve it. I will help you when we'll do questions regarding that. I'll help you how to solve it. And because we make this diagram in 3 pages, so it's quite complicated to reconnect it. So when I'll upload the chart today only, and then you will find out the whole setup on a single page. So that will be really easy for you to understand what kind of connection we need to make. Moving on to our notes now. Taxability of motor car rules. The provision we just discussed in the diagram now is on notes. If motor car is provided by the employer to the employee, it will be perquisite in the hands of specified employees only. It's saying specified employees only. And later it will tell you that if the car is owned by employee, then it's taxable for all employees. But if car is owned by employer, then only it is for specified employees. So do not get confused. It will be written in these notes later. However, the use of vehicle provided by a company or an employer for journey by the assessee from his residence to his office or other place of work, or from such office or place to his residence, shall not be regarded as a benefit given or provided to him free of cost. I've told you that means 100% official purpose. So if you are using car from office to your house, etc., and not in any other purpose, then it will not be perquisite in any case. But if motor car is owned by employee and used by him or member of his family or household personal purpose, for which employer reimburses the running expenditure, it will be the perk. The value of perk by way of use of motor car to an employee by an employer shall be determined as following manner. So this is the case, taxable in the hands of all employee. When it will be taxed in the hands of all employee? When car is owned by employee. That is our first case. When car is owned by employee, expenses met by employee, then tax value will be nil. If expenses met by employer used for official nil, private purpose, actual expenditure, and if any amount recovered from employee, that is from general note. If any amount recovered, then it will be deducted. For both cases, actual expenses less. If car up to 1600cc, 1800 rupees per month. More than 2400, driver 900, or actual expenses for official purpose, whichever is higher. The third case of our diagram. Any amount recovered will be deducted. In the hands of a specified employee only, if car is hired or owned by the employer, expenses met by employee, official nil, private purpose 10% of actual cost or rent, as the case may be. The third case for both purpose, this is when car is owned or employed by hire, expenses met by, I guess this format has some error. Car is owned by, this is 10% case maybe, a driver shall be provided, less amount recovered. No, it's correct, fine. So 10% of cost of the car or rent as maybe, driver shall be provided. If employer paid that amount, then it need to be added, then less any amount recovered. I guess there is some error in this format. I will rectify it. You can refer the diagram. It is accurate and correct. You can find out the correct value from that amount. Expenses met by employer, that is correct. Okay. Official purpose nil. This is the last case. If car used for private purpose only, then add expenditure including driver salary if 10% of actual cost value or the rent tax value less rent recovered. The last case is this is going to be taxable directly 1800 rupees per month, 2400 or 900. Again, this is a fixed case in which you cannot deduct anything from the recovery. As the same case which was over here, official purpose, that is 600, 900 and 900 as referred in the diagram. And this is also going to be taxable fixed. Nothing is going to be deducted. And I guess this is also correct. Okay. Now the other automotive conveyance, if other than car facility, you have been given other automotive conveyance like bike, two-wheeler, etc. So in that case, only one situation has been described. That is, you should own that bike or two-wheeler. Expenses met by employer, that is going to be employee, that is going to be nil taxable. If expenses met by employer, if only for official, that is not going to be taxable. If for both official and private, then total actual expenditure less 900 rupees per month, that is fixed, or actual amounts for official purpose, whichever is higher. Like the case in which we deduct from the official expenses, and the same is applicable over here. So this is not that important case because in examination, generally car perk has been asked. You can read it over here. If there is any confusion, we will discuss the confusion. I'll rectify it for you. Month means, there are some important notes, you should read it. Months means completed months. When more than one motor car is provided. Now this is a complicated scenario. If employer provide you more than one motor car, then what will happen? The provision says one car, anyone, taxable value as used for both private or official. For example, if you have 3 cars, employer provide you 3 cars that you can use anyone as you want. Then in that case, out of this 3 car, you need to taxable 1 car, assuming it as used for both purpose, official or private. That means last case, 1800, 2400 or driver if there, then 900. So if there is more than 1 car has been provided, then out of these car, you should take any 1 car and taxable value find out as this is used for both private and official. And all other cars, like you have 3 cars, so 1 is going to be taxable, assuming that it's used for official and private both. and the other 2 car will be taxable, only treating as it is used for private purpose only. Okay. So that was the difficult perquisite, the car perquisite. And let me see if we have time, then we can move on to some numerical. Now, other perquisites are very simple, very, very simple. Like domestic, the most difficult part of salary has been completed. Now, the water, electricity, concession, education facilities, ticket facility, loan facility, traveling. These are very, very simple. Might be you seeing the paragraph, but technically they are all 2 lines or 2 provisions. There's a single provision, almost same applicable in every case. That will be really, really easy. We can cover it within 30 or 40 minutes in our next session, of course. Shares, provision, etc. Then we will moving on to relief, etc. So before that, let's take some questions today. So you will be able to understand the provision nicely. Let's see if there's some query. Then first of all, we should take them. Okay, so there is no query. Very nice. So you are all focused, I guess. Kindly check tonight. I will upload the chart for both rent-free house and technically for, I guess, all salary provision till now we have discussed. You can download that chart and please go through it. That will be really helpful for you and you will find that provisions are not that difficult. Fine. So in last class, we discussed the provision. Okay. In study page number 4.58, illustration number 11, which relates to leave travel concession provision is going to be discussed. Fine. Moving on to page number 4.58. So leave travel concession provision we discussed that there's a question. Mr. D went on a holiday on 25th December 2022 to Delhi with his wife and 3 children, one son aged 5 years and twin daughter aged 3 years. So please remember, I have taught you that if children born on or after 1st October 1998, then only maximum 2 of them allowed. Clear? But if single child born first and then twins, then all of them allowed. So in this case, you can see a son aged 5 years and twin daughter is 3 years. So who born first? The single child born first, and after that twins birth happened. So we can take all of 3 of them and we can take exemption for all 3 of these children. They went by flight economy class and the total cost of ticket reimbursed by his employer was 60,000, 45,000 for adults and 15,000 for 3 minor children. That means 5,000 for each minor children. So amount paid by employer is 60,000 in this question and ticket reimbursed by 60,000. Compute the amount of LTC exempt. So now you can see the amount paid by employer is 60,000. Now we need to find out the ticket value by national carrier. It has been given that 60,000 again. So ticket value 60,000. Amount spent is also 60,000. Whichever is lower is 60,000. So there is no taxability because the whole amount is exempt. You can see since the son age is more than the twin daughter, so Mr. D can avail exemption for all of his 3 children. The restriction of 2 children is not applicable to multiple birth after 1 child. The holiday being in India and the journey being performed by economy class, entire reimbursement met by employer. For example, if in this question, it has been given that employer paid 80,000, then what will happen? 60,000 will be exempted and 20,000 is going to be taxable. Clear? Now, illustration 12 says in the illustration 11, what is the difference if 3 children, twins age 5 years and the son is 3 years? That means now twin birth before the single child. In that case, out of these 3, only 2 exemption can be claimed. So total 15,000 we receive for 3 children. That means For one children, 5,000 is going to be taxable. That the single child born after the birth of twin children. So since the twin is more than son, D cannot avail exemption for his 3 children. LTC exemption can be availed in respect of only 2 children. Taxable value will be 5,000. So exemption will be 55 and taxable will be 5,000. I hope it's clear. Somebody was asking me to solve a LTC question. So that's the way we need to solve it. Okay, moving further. Medical facility provision. Illustration number 13. Compute the taxable value of perquisite in respect of medical facility received by Mr. G from his employer during the previous year. Now, medical facility solution is very easy. You need to find that government hospital exempted. You need to know that commissioner approved hospital for a specified disease is exempted. You need to know that outside India, expenses of patient for treatment exempted, and stay and travel expenses of patient and one attendant is exempted up to the RBI limit. So this question I am not going to solve because this is 1 point question. You can see as per the provision of medical facility, and then you can relate that if these points fall in that any category going to be exempted, and if any category which is outside that the exemption category, then you need to taxable it one by one. The solution is over here. If there is any problem, I will definitely going to solve it for you again. Okay, now moving on to our next perquisite, that is rent-free accommodation. That will help you to understand the provision correctly. You can see we discussed the rent-free house provision, and might be you are feeling that it's very difficult. And now what will happen when we will solve the numerical? Now you will feel that is very easy, and even car is far easy than rent-free house, because you just need to crack the correct case in case of car perquisite. If you're able to find the correct case, then there is no requirement to calculation of salary, etc. That is directly going to be taxable. I'll show you how it happens. First of all, we are going to solve page number 4.71 of your study. Sorry. Okay. So this is page number 4.71, and here is the rent-free house provision question. Mr. C is a finance manager in ABC Limited. Okay, the company has provided him with the rent-free accommodation in Mumbai. Very good. He gives you the following particulars: basic salary 6,000 per month, DNS allows 2,000 per month, 30% is for retirement benefit. So 70% is for DAS for non-terms. We will take only 30% for the calculation of rent-free house salary. Bonus 1,500 rupees per month. Even though the company allotted the house to him on 1st April 22, he occupied the same from 1st 11/22. Calculate the taxable value of perquisite. So we always take salary from that day from the house is occupied by the employee. So he occupied that house from 1st November 22. So we will take from November, December, January, February, March. We need to calculate only 5 months monetary salary. Only 5 months monetary salary. So in case of monetary salary, we will take 6,000 into 5. DNS allowance is 2,000. We will not take DAS per non-term. We will take only DAS per terms of employment. That is 600 rupees, 30% of 2,000. That is also for 5 months. Then 1,500 rupees bonus per 5 months, because all monetary need to take. This is not gratuity C case. That when you take the commission, we need to take all monetary payment. So this will come 40,500. Now the accommodation is in Mumbai. Do we need to know the population of Mumbai? Should be given in question. So common says metro cities population is more than 25 lakhs. So we will take 15% of this as your rent-free house. So you see, it's very easy. How easy was that? When we were studying the rent-free house provision, you might be feeling it's so complicated, but we solved the question like this. Next is Using the data above in the previous illustration 14, compute the value of the perk in Mr. C is required to pay a rent of 1000 per month. Now, I told you in every perk, except that car perquisite two fixed cases, if any amount is recovered from employee, that is going to be deducted. So in the above case, taxable value was 6075. Now he's saying, assume that company charge 1000 per month from the employee against this perk. So for 5 months, he need to pay 5000. So now taxable value will be 1075. Simple. Done. Numericals are easy. You might be finding it complicated when you read the provision. But when you implement it, that is technically easy. You just need to remember the correct provision and how to implement that. Using the data in illustration 14, compute the value of perk if ABC Limited has taken this accommodation on a lease rent of 1200 rupees per month. Now the case is not owned by employer. Now the case is on rent. And Mr. Employee need to pay 1000 per month. So what is the provision in case of, if it is on rent, it's 15% of salary or rent paid, whichever is lower. So 15% of salary will remain the same, 6075. That is, but he's paying 1200 rupees. So rent paid is 6000 by the employer. Whichever is lower is 6000. We need to deduct 5000 because of recovered from employee. So taxable value will be 1000. Here is the solution. Lease rent paid by 6000. 15% is 6075. Taxable value is 1000. Next is furnished case. Using the data given in illustration 14, compute the perk if ABC Limited has provided a television WDV 10,000, cost 25. We need to take 10% per annum of cost, not the WDV. So we will take 10% per annum of the cost for 5 months value. So TV is owned by employer. So we will take 10% of 25,000 for 5 months. And air conditions also, but that is on rental basis, 400 rupees per month each. So for 5 months, it is 2000 for each air condition. So we have 2 air conditions. So that is 4000 is rent paid for air condition, and 10% per month of 25,000 need to be added for furniture value. All other things are same actually in the question. So you can see the solution. 6075 is the taxable value as per illustration that. Then 15% of salary out of that, furniture value 400 into 2 into 5 plus 25,000, 10% per month for 3 months. Why 3 months? Because this furniture has been provided from, television has been provided from 1st January. So for television, we will take only January, February and March. 3 months taxable value, that is 3 upon 12. That will come 4625 for both things. 4,000 for air condition and 625, that is 3 months taxable value for the television. That is 4625. Total accommodation value 10,700 and rent paid by employer is of course 5,000. So employee, so taxable value will be 5,700. Is it this simple? Fine. So you can try illustration number 18 yourself. Again, it's for government employee. You can solve it by in a minute, of course. The motor car perquisite. So I would take to solve one motor car or two motor car case if it is in question. Okay, there is no question has been made for motor car perquisite. That must be in the total value of question cases, but I need to solve it. So you will find out that even motor car perk is very simple. Let me find a question for you. Okay, not over here. Just I'll take 2-3 minutes, then the class will be over. I'll take the query, of course. Okay, no motor car perquisite either. Okay, yeah, motor car provision is illustration 23 on page number 4.96. Okay, and you will see how easy it is. And this is the way the question is going to be asked regarding the motor car park. This is. Now read with me very carefully and do not try to solve it. Do not try to solve it. Nobody will try to solve it. Nobody. First of all, you will find which case is applicable. Then we will try to solve it. Right? We need to see who owned the car, who paid the expenditure, and use of the car, official, private, or both. Right? So a car of 1200 cc, which is owned by X Limited. X Limited is the company. So the second case applicable, that is car owned by employer. Clear? Imagine the diagram. Case 1 is, forgot about the case 1. Now we are moving on to car owned by employers. That is our second case. Clear? And given to Mr. Y to be used both for official and personal purpose. So now I know that car is owned by employer. That is second case. I know it is used for both purpose. But one thing left. Who is maintaining the expenses? Who is technically paying the maintenance expenses? That is also need to know. That only then we can able to solve. All running and maintenance expenses are fully met by employer. Wow. So car is owned by employer. Great. Expenses met by employer. Great. And used for both purpose. Great. So this is which case is applicable? The last case. Car employer, expenses employer, used for both case. Last case. And 1200 cc. He is also provided with a chauffeur. Chauffeur means driver. So now we have a car of 1200 cc and this is the last case. What is the provision in last case? Up to 1600 cc. 1800 rupees per month. And if driver, then 900 rupees per month taxable. So 2700 rupees per month is going to be taxable. Into 12, you will find the answer. This is the solution. That is 1800 plus 900 into 12. That is 32,400. This is in the examination, this perk comes like this. So when we were studying this car perk, you might be get confused or horrified or terrified. Oh my God, how I'll able to learn all these concepts? You just need to find the correct case. If you are able to find the correct case, I promise, trust me, you will be able to find the correct value. It is not that difficult. It's very easy. You just need to understand the case. Car is owned by whom? Expenses paid by whom? And which case is applicable? Used purpose, both private or official. If you will able to do that, you can solve this question. I hope now you must have some confidence about the car perk and rent-free house. These are the two most difficult perk. But I'm just telling you, nothing is difficult. If you have the right way to understand things, that is going to be easy. We will do more question in our last session also. So I guess, first of all, I should take the query and then I'll close the class. Kindly make MCQ. Of course, I'll solve the MCQ or I'll also going to solve a subjective question with that. Okay, so we are done with it. So next class will be day after tomorrow. Till that, you should study again. And as I always say to you, please follow this. Please follow. All studies are waste if you are not following this. Please revise twice. That's my advice to make you wise. So please follow what Ankit Sharma CA is saying. This is for your benefit. Please revise it. As many times you can revise things, you'll be able to understand things very easily and strongly, and you're able to solve the question examination also. So with this, I need to conclude the class, and we will meet day after tomorrow. Till that, have a good day and see you soon. Bye-bye.